Alright, so this is the weekly review for March 18, 2024. Going into the week, this is the previous week close. We had a bearish close below these lows here. And we had the similar thing on S&P 500 in the fact that they both closed as the last 2 weeks of S&P 500 closed as a doji, whereas Dow Jones closed below the previous week's low. So Dow Jones looks similar to this, whereas E-mini S&P was a doji close with the bearish doji. All right, so going into the week, my bias was bearish because of the fact that there's a seasonality, and that previous week close was here. We had LR signature here and these lows here, so we could have potentially ran that low into this internal range liquidity that resided below here. That was a very large weekly objective. So the weekly bias was bearish. Weekly profile, we had news, so going into it, we could have expected a Wednesday FOMC press conference to create some type of a low or a high, right? We could have expected a consolidation followed by a midweek reversal or some sort. So going into the days, going into the day, right? Let's look at Monday, Tuesday, right? We had FOMC on Wednesday. So Monday we pushed higher. This candle or this fair value gap was a POI for me, right? Because the previous week we made the high, we broke down, we showed support at this breaker block here, and then we continued to flush down, right? Again, we took out external range liquidity, we came into internal range liquidity, which is down here. We passed through that internal range liquidity and we moved another leg down, broke this low, and this would have been the POI going into this week. So we hit this POI on Monday, right from the get-go. As soon as we opened up, we started moving up into this POI. So I took a trade on Monday because this POI was hit based on the 15-minute advanced market structure here. So as you can see, setting executions. So I took a sell here and offloaded here. I entered here originally being impatient, and then I so I sold here, ended up getting stopped out, and the reason being I did not wait for advanced market structure to confirm. So let's look at the advanced market structure that I was looking at here. And so once we hit POI, this is a 50-minute chart, time frame alignment, right? This was at 9:30, right? So 9:30 we hit that, we flushed down, right? So I entered here thinking that we're gonna break this low. Then we ran it up one more time here at 10:15 to 10:30, right? So originally, so my mistake number one was the fact that I did not wait for this order block to be broken. So change in state of delivery did not happen until, in my opinion, until this candle here, right? But nonetheless, as you've seen that I entered early again. So one of my mistakes is not being patient. I should have entered on this candle here. That would have been the adequate POI here, but I did not again wait. So market structure change in state of delivery happened here. For me, I thought this would have closed here and I entered here, so that was again being impatient. So long-term highs, short-term highs, short-term highs, short-term highs, intermediate term high was put in, right? Once the intermediate term high was put in, the highest probability trade would have been this ran up into this order block here, and then take that sell and hold it till Tuesday to get to this POI on daily. So I did not stick to my rules and enter at the silver bullet pattern. Instead, I entered early, but I had a tight stop loss here above here, and my risk to ratio was nonetheless 1 to 2. So once that POI was hit, I thought that we were gonna break down below the weekly lows, right? Previous week's low, and then into these internal range liquidity again. But again, I was found to be wrong because of the fact that the weekly obviously was not a expansion up down. All right, so the weekly buys, instead of pushing down, we instead pushed up. So next day model, if you look at, so my bias was wrong, obviously, right? So my bias was wrong, and Wednesday was the FOMC. So Tuesday we took the short down. We did not reach our objective here, and I'll talk about why we didn't reach that objective, right? That was my mistake number 2 for that week, and instead we reached here on Tuesday and we started pushing out, breaking market structure, changing state of delivery here on 4 hours, and then we kind of consolidated until FOMC release at 2 o'clock in the afternoon, right? We kind of shot up. There was no real entry here, even off a 1 hour chart on either ES, Dow, or NASDAQ. So this was the Tuesday. Wednesday we consolidated as expected, right, from the midnight opening price into London. We kind of pushed up, and then around New York open we pushed down. I thought we would run these lows, come into this internal range liquidity after taking external range liquidity here, and then FOMC would move down to go up, but instead we just shot up. And Thursday, again, there was no real entry here off of these discount arrays. So if you look at Wednesday, right, we kind of pushed up into here on Wednesday, right? There was no real discounted area for market to push up into this objective here of weekly high. So off of hourly of next day model, there was no real entry, but we did have a setup on TGIF, right? If you look at TGIF setup again here, we had weekly objective reached on Thursday. We had change in state of delivery here, and then we kind of we didn't really reach up to the discount arrays here up until Friday close, but nonetheless I was able to take a short here and cover down here somewhere. So, and I'll show you that that short there execution again. I was anticipating the high to be formed here, so I entered here, got stopped out a couple times, and then finally this was the short that I took prior to New York open, and then I was able to recover here, and the market structure off of was, I think, 5-minute chart. So if you look at 5-minute chart here, in the London session we ran the highs, right? We had a change in state of delivery here. So this is the short that I took based on the fact that we had a this is the 1 hour, right? So this is on Friday TGIF. We hit that point of interest off of that weekly objective, right? And then we broke down here. This was late in the Thursday afternoon. I did not see any trade here, and then Asia, and then London session here, we reached the Asia high, and then we had a market structure shift here. Again, I should have waited. As you can see, I did not wait, and we started pushing down, and I was able to recover here for TGIF protocol. So TGI protocol would be 20 to 30% of that weekly range, especially on Wednesday to Thursday. So that's why I took profit here and I did not hold it. Alright, so a couple things that I learned this week, couple observations that I want to note at this time. If you look at this run into Monday POI of that 4-hour POI, right? So 4-hour POI, I should have waited. That's mistake number 1. Mistake number 1 is the fact that I did not wait until we had confirmed advanced market structure in place. So I should have waited until this candle here at 12:45 for me to have any consideration to take a trade into these discount or premium array again, right? So the premium array would be in this 50%. So this high I should have entered. Instead, I entered too early. That's mistake number 1. Mistake number 2, or the observation that I noted, was the fact that if we're pushing for weekly objective, which are below these lows here, into the weekly internal range liquidity, right? If we're pushing for that, we should be breaking these lows like a hot knife through butter, right? We came here, we stalled. Why is that? We should have pushed down, and again on Wednesday we failed to go down here. We consolidated in this range on Wednesday, right? We consolidated above or at around this point of interest here, right? So we consolidated around this point of interest, and we failed to go lower. So if you look at it from an hourly chart, this is what I'm trying to explain here. this was the weekly range so far, Monday to Tuesday, right? So if this is the Monday to Tuesday weekly range, so the Friday created the low here, right? We are keying off of that low into these highs here on Monday. So if this is the weekly range, Tuesday failed to go below this low, right? Instead, we pushed up, we consolidated above the 50% of that range, right? So if you can see, we consolidated above the 50% on Wednesday. When is the FOMC release? We could have expected to hit that 50% and then run up. If we were to be bearish, like we were in the beginning of the week, we should have consolidated around this 50% below and then move up to go down, right? Instead, we did not do that. We are above the 50% when we pushed up. So I failed to notice these things here on as the week progressed. Another thing that I failed to notice was the fact that on a daily chart, here, I failed to notice that we had a internal range liquidity here. So this is the internal range liquidity that rested below here. We had LR resistance, LR signature here that Friday we dipped into, right? So if we came into this range on Friday, right, on a daily chart, I should have expected a support or resistance here, right? What are we seeing here? We're seeing support on Friday, right? We have this 2 down close candle, high probability down close candle, right? These 2 high probability down close candle here. Tuesday we came exactly into that range, right? We came exactly into that range in an area of daily fair value gap, daily internal range liquidity. Came here on Tuesday and we're showing support. This is the midpoint of that 2 down close candle here. We're showing support here on an hourly chart. Finally, we have a change in state of delivery here at this candle's high, right? We have a change in state of delivery here. We have a breaker block here. So on Wednesday, we could have dipped down into this area to go up. But what I should have noticed was the fact that this order block was showing support and we pushed higher. So this POI of a 4-hour chart is invalidated, right? We took a ride from here, came down. This should not be respected anymore. So we are going to be pushing higher into these objective here. So I failed to notice these things on a daily chart. So I did not open up a daily chart and realize these things. And the third thing that I noticed as the week played on is that FOMC does not give, or didn't, at least in this month's FOMC, it did not give us an entry here, right? So once the market, it was a Tuesday low, so classic expansion, right? Tuesday. Wednesday was a high probability trade, right? And created the bulk of the range as expected. And then Thursday we hit that POI. Alright, so now that we discussed a few things that I learned this week, that always 4-hour POI, if it's going to be validated versus invalidated, zoom out to a daily chart to see if I'm missing something, and then look for a change in your weekly bias, right? Once you look for a change in weekly bias, so going into the week, I thought that we would have a Monday, or is it Monday? If you look at 4-hour chart, I thought that since we reached this POI on Monday, we would have a classic expansion to the downside, right? But instead, we created a classic expansion to the upside, with the Tuesday being the low of the week. So try to be more fluid with your weekly bias, and be ready to change that bias as you see the weekly candles, or the 4-hour candles and 1-hour candles being formed. So be fluid in that sense. FOMC news press conference is a one-sided direction, with the Wednesday being the bulk of the candle in the afternoon session after 2 p.m. Thursday reached the POI, and then we had a TGIF. Now, TGIF is based on the fact that we had a classic expansion. TGIF can form 2 different ways. Either Thursday can reach the POI and then have a change in state of delivery, or Thursday could have consolidated, Friday it hit the POI and then change the state of delivery, right? So if this is our range from Tuesday high to Thursday high, where can we reasonably expect prices to dip down into? So we can reasonably expect prices to come down into 0.2, right? Or 20%, 20 to 30% of our weekly objective, right? So it could be 0.3, 0.3 here, right? We kind of hit that right there, and that's why I elected to take profit there, because we're inside this internal range liquidity again, above the discounted range. So this is why I took profit there at these two candles here. So TGIF Friday, if it's a 1 hour, right, I would play off of the 1 hour. We had changed the state of delivery here, right? Once we had a change in state of delivery, I would look for a 5-minute setup there, right? So we had a fair value gap. Ideally, I want to see a run off of these premium array here. So we had a breaker block here on 1 hour chart. So we hit that breaker block at 5 in the morning, right? And once we hit that, this is why I elected to go off of that candles here, right? So we hit that. I wanted a deeper retracement into here when New York opened, but I elected to take profit here before the New York. So what I took profit around 8 o'clock, 8:15 to 8:30, and the reason being I thought that we would slowly dwindle up into this area. Maybe at 9:30 open, we would reach far into this area, more into the premium range, and then have a sell-off here on a TGIF Friday. But instead we didn't get any of that. We kind of dwindled up into here, like as around 1:30 to 2:30 in the afternoon, right? And then we kind of dwindled off. So TGIF Friday can be expected after a classic expansion range. So those are the things that I wanted to share with you today. So we went over the weekly bias, how it changed, and the weekly profile was a classic expansion. Economic calendar being the FOMC press conference. POI was that 4-hour fair value gap that we reached up into Monday. Next day model didn't play out for us because FOMC did not give us a chance to enter. TGIF Friday, that was a setup that formed off a 1 hour chart, and the 3 mistakes / learning opportunities for the week of March 18, 2024.